I'll take this. The consolidation that we've been seeing for the last two sessions, three, if you include today's session as well, I'll take this. We've had two sharp days of, or 2 days of sharp up moves. But what's heartening is that, the Nifty is sustaining above the 24,000 mark. So as long as that is the case, I think we are perhaps in good stead right now. For me, as I spoke yesterday on the morning show, Nifty is along with the stop loss just under 24,000, perhaps 23,900, 950 kind of levels. For the first target was 24,350, which was hit yesterday. But today, since we are a little off that, you could play for that as well. And then the second target from there on is 24,500. So fairly bullish on Nifty. Uh, Slightly more on the bank Nifty, and the reasoning is that the 52,300 upper end of the range that the banking index has been for about 2 months has been breached. We're sustaining above that. So if that does sort of happen and we get a close, one more day of close above the 52,300 mark, you could see Bank Nifty heading towards 53,000 and higher. So bullish on both. Bank Nifty for me has a slight edge over Nifty.
All right, let's start with the first question on WhatsApp, Mahima.
Yeah, the first query is from Prem Kumar, who is from Chennai. Now, he has 100 shares of SML Isuzu, and he's purchased these shares at a price of 1,888 a piece. And he's saying that he's sitting at an approximate loss of 21,900. He wants to know whether he should keep holding it, average it out, or sell. Sunny, I'll come to you for this one. Do you have coverage on SML Isuzu?
Yeah, Good morning, and first of all, thanks for having me on the show. Not an active coverage, but passively, what I feel is that the company is into the commercial vehicle and predominantly into the buses segment. So if you see, most of the time, basically March and June quarter is their peak quarter, and then followed by seasonally weak quarter December, and September quarter is seasonally weak quarter for them. So if I look at an annualized number, I think the company on an average is clocking a profit of close to 110 crore, and at a current market cap of 2,400 crore, trading at close to 29 PE multiple. I think post this correction, one can stay remain invested in SML Isuzu. And whenever there is a rise in the market, whenever there is a rise in the stock price, then one can exit and shift to a better name within the auto pack. So few of the names which I would like to allude over here is Hero MotoCorp, where we find the valuations are a sustainable, Mahindra and Mahindra. So these are the two names I would like to recommend at the current juncture.
MotoCorp. And by the way, we had an interesting report earlier on in the day that we had, and we'll probably put that up on social media as well. We were talking about the latest Vahan data. Hero MotoCorp looking particularly good when that data is looked at least in the short end. And Mahindra and Mahindra, of course, trying to bolster its presence in the electric vehicle space. So that's an interesting space to watch as well. The next question we're taking is from Venkat Ramani. He's writing in from Bengaluru, and he's got all cargo logistics in the logistics space. He's bought at levels of 74 rupees a share, and he's wondering whether to average or whether to, and I know that Kush does not like the strategy, but whether to buy right now or whether to hold on to his investment. He's got a 12-month horizon that he's looking at. What's the view?
First of all, I'm glad that the no averaging strategy is starting to stick with you and eventually with the viewers, I suppose. There is only a very specific case when that works. Right now, all cargo logistics does not fall under that view. So, as you rightly put, if I were to look at it afresh, would I consider buying? Maybe for a very aggressive trader. So, he's holding it from levels of 74, which means, he's in deep cuts. Now, for the first time after a while, the stock is actually hitting the 20-day moving average, but not being able to close above that. So my suggestion would be to keep a stop loss about, at about 50 odd levels. So maybe just under that 49 odd levels. If that is breached, which is a near-term low, then, the stock could be under a bit more pressure. On the way up, you're looking at levels of 58 and then perhaps a 65, which is still not up to his buying mark. But my suggestion that, as the stock inches higher, closer to these levels, you should start exiting in part.
All right, we've got a first caller for the day, and Rajan Iyer is calling us from Mumbai. Rajan, good morning to you, and thanks so much for calling us. How can we help you today?
Good morning, Mr. Alex. I'm really a fan of yours and the madam sitting next to you, because you people relay in such a good manner that we are induced to see the program day in, day out. But now the query, Union Bank of India, I have 500 Union Bank of India purchased at 145 in June 2024. I am a long-term investor for 3 to 5 years.
Yes.
Would you advise me to wait, or should I should I switch it to Swiggy or Zomato? I don't mind waiting for Union Bank because I know the fundamentals. Kindly advise.
Okay. Rajan, first of all, thank you so much. You've absolutely made my day and my week. Very, very kind of you. And thanks so much for watching the program. I hope that the advice that is dispensed is helpful to you as well. Just a couple of follow-up questions from my end, just so that our experts understand what you want to know. Is this part of a broader portfolio of stocks that you have, and you don't have Swiggy right now, right?
No, fortunately Swiggy I was allotted 190. I want to collect more.
Okay.
In the recent IPO.
Okay.
So this Union Bank as a part of portfolio, I am having major portfolio, but based on the fundamentals I have purchased.
Understood.
So can you advise me that is it worth holding for 3 years or so?
Understood. Okay, I got your question. Sunny, I'm coming to you on the fundamentals of Union Bank of India. Of course, the PSU banking space, some might argue the banking space in the whole. Of course, we're speaking on a day when HDFC Bank is hitting life highs. Finally, it's been trudging up quietly, and I think some people might have missed that run up, right? But would you say that Union Bank is the best investment to make in the banking space for Rajan?
Not a best investment, but again a decent bet post this correction. I think trading close to one-time price to book, a decent growth trajectory, kind of 11-12% credit growth is something which the bank is expecting to deliver. At the same time, Q2 was one of their highest operating profit quarter as far as Union Bank is concerned. So what I would suggest is that Union Bank is a play where over the period of next 3 to 6 months one can expect a return of kind of 15 to 20%, assuming that all the concerns pertaining to bank regarding the pressure on NIM deposit mobilization goes away. So I think a kind of 15 to 20% kind of rally one can expect in Union Bank over the next 6 months. And coming to Swiggy again, I think since the viewer want to switch to Swiggy, Swiggy again is a kind of turnaround play where Zomato was 2 years back. So path to profitability is something which Street is keenly looking from Swiggy. So again, it's a turnaround, high risk, high return bet. In case Swiggy is able to deliver a profitability, then very similar to Zomato, where one can expect a healthy return from a Swiggy also, because on valuation front, Swiggy is trading at close to 40% discount to the Zomato's valuation. So again, both are a different play. Union Bank is a kind of stable company. One can expect 15-20% kind of return, whereas Swiggy is a high risk, high return, where one can expect that stock can double over the period of next 2-3 years in case path to profitability is something which management is able to stick to.
I just want to draw your attention to the equity markets. 10:30, just about 12 minutes back is when we started out, and you had the benchmark Nifty 50 that was more or less range bound and trading with very narrow cuts. At this juncture, it seems like it has fallen off a cliff. It is down about 0.7% and very close to the low point of the day. I'm looking at the screen right now, and a few stocks stand out that have dropped quite significantly from the high point of the day, and I'm going to read them off, so perhaps we can pull up the intraday charts. Tech Mahindra is one. It's dropped about 2.5%. Power Grid is dropped about 2.5% from the high point. It's now trading with cuts. You also have Mahindra and Mahindra, which is trading now with cuts of about 2.5%. That's dropped quite precipitously. You have HUL, HCL Tech, Eicher Motors, all dropping quite considerably. Kush, what are you seeing that is indicating this kind of volatility? Of course, today is also expiry day.
So I think, Alex, you've hit the nail on the head with that statement. That's the only thing that is perhaps playing out. If you see, there are, there is a call option writing as well around, the 24,300, 24,400 kind of mark, and that is perhaps playing out. But at the same time, you've got a good base of put options around the 24,000 mark. So while this volatility, because of the expiry, cannot be ruled out, as I said, as long as 23,900, 950 is held, I think this dip might just turn out to be a buying opportunity, on the Nifty. Even yesterday, if you recall, Bank Nifty was under a bit of a pressure and has been seen underperforming the Nifty for some time. But that was largely due to the expiry pressures only. I would attribute this move more to expiry than anything else. As long as these key levels are held, I think this dip could perhaps be a buying opportunity for the Nifty.
The broader markets have actually given up ground. You have the small cap index that's down about 0.75% from the high point, and now with gains of only about 0.25%. Similar for the mid cap index. That's up about 1/3%. Let's go to the next question though.
Right. The next question is from, okay, we have the name. It's from, Parasaran Chaudhary, and he's writing about IREDA. Now, I think he's given the correct number of shares that he's bought. He's bought around 10,000 shares of IREDA at 276 a piece. 3 months ago is when he purchased, and he's saying that he's bought it without knowing fundamentals. Now, he's asking whether there is any hope that it would go up, or should he wait further for a longer period of time for the stock to give a good amount of returns? Sunny, I'll come to you for this one. Your view on IREDA?
Again, IREDA is the one stock which one can't justify on a fundamental thing. So what I would recommend is that better to take a push view. What should be trailing stop loss and ride the rally which is currently going on in IREDA.
View on IREDA, what do the charts suggest?
So not a very encouraging move up until yesterday and today, but there has been a positive divergence. The stock is above the 200-day and the 20-day moving average, knocking on the doors of 50-day moving average. My suggestion is that hold on with the near-term lows about 185, 190 as your stop loss. Already in a deep cut, but there has been a base formation around this level, and the stock is attempting a recovery with good volumes. So 185, 190 zone should act as your stop loss. On the way up, I see supply pressure somewhere close to the 240 mark, and once that is taken out, close to 265 mark, which is very close to his buying price. But then again, like the previous advice I gave, you're better off exiting at a lesser loss than waiting for a substantial profit, in this one. So 240 and 265 are the levels that I look for, exiting this stock gradually.
I believe we've got the next caller. Ram is calling in from Chennai. Ram, am I mistaken? Did you call us recently? And also, good morning. What do you want to know about?
Good morning, sir. I am holding 1,000 shares of NHPC purchased at 75 rupees.
Okay.
Shall I hold it for some more time?
Okay.
Or this SJVN is a good to enter now?
Okay. You want to know whether to add more. Just wondering.
Add more?
Yeah. So just wondering, what was the thinking when you decided to buy NHPC, Ram?
NHPC seems to be a good dividend yielding giving company.
Okay.
And moreover, they are going for solar also, na?
Okay. Right. So diversification from the hydropower space is what you were looking at. But then why 1 year?
1 year is my aim.
Okay. Okay. So, but are you comfortable holding for longer than that if the advice is to hold for long term?
Yes. No
Okay.
problem.
Okay, you're willing to hold. So Sunny, partly because he thinks it's a good dividend play, and partly because of the prospects in the renewable space, he's looking at NHPC, and he's bought at levels of 70 or thereabouts. Stock is trading well above his buy price. Should he hold on? Should he add more at this point?
What I would suggest is that the fair value of the company is close to 100, 110 rupees. Better to not to deploy capital in NHPC. There are many other better power play which is available in the market. Case in point NTPC, where we have seen a steep correction, and with the recent listing of NTPC Green, I think that is something on a SOTP basis. We feel the fair value of NTPC is close to 460, 470 rupees. So NTPC, I believe, can deliver a better alpha from here on. And at the same time, there are other way like transformer, cables and wire through which the power sector can be right on.
We have the next query on WhatsApp, which is from Sasideep. Now, he's having Swan Energy 1,000 shares at an average price of 528. And he wants to know whether to book profits, keep holding it, or accumulate more going forward. Sunny, I'll stick with you for this one. Your view on Swan Energy, if you have any.
Yeah, again, coming to Swan Energy, so again, a mix of diversified business, and the recent trigger has been the acquisition of the Reliance Naval Defense business, where it is expected that the company will get some mandate on shipbuilding side and so on and so forth. Again, it's a high risk, high return story. I would would recommend to remain invested in the company with an expectation that it can deliver a multi-bagger return over the period of next 2-3 years in case something on defense side materializes for the company. But at the same time, I would recommend to keep a trailing stop loss, which Kush can advise based on technicals.
All right, I'll hold on to that though. Kush, I want to come to you on another stock. Cochin Shipyard is the name of the counter, and this is something that caught my attention today because the stock is up or it was up about 4.5% this morning as well. It's up about 3.7 today, and it's approximately up about 20% in just a week's time frame. We've got a viewer, Krishna Prasad, who's bought at levels of 1866, so slightly elevated levels. He's asking whether he can buy at this current juncture.
So just to round off the discussion on Swan Energy, with the Sunny's point on trailing stop loss, 565, that's the level that you want to keep an eye out on. That should be your trailing stop loss. Now coming to Cochin Shipyard, yes, the stock is seeing a bit of a recovery, and it's crossed the two litmus test, which is the 20 and the 50-day moving average. There is a good possibility that the stock could inch higher. So if he's got a view of, let's say, anywhere from 9 to 12 months, there is a good possibility that he could actually see profits on this one, where the stock could head to 2050 kind of levels, and higher on from there as well. The only concern that I have on this recovery that we've seen in the last couple of days is that it's not such a strong volume backed one, but that is understandable given what the setup the market has right now. So volumes could eventually pick up. At the moment, the stock has shown good gains over the last 4 or 5 sessions and is holding on. So your stop loss on this one should be close to 1350. And as I said, for a view of 9 to 12 months, there's a good possibility that he could see his buying price and then some more as well, close to 2000 or 2050 levels in 9 to 12 months time frame.
All right, so that's the view coming in on Cochin Shipyard. But we have our next caller, who's Suresh from Hyderabad. Suresh, welcome to NDTV Profit, and thanks for calling. How can we help you?
Thank you very much. Good morning to you all. I'm calling from Hyderabad. My name is Suresh. I've got Indian Oil Corporation, IOC. I bought 200 shares 3.5 months back at 174 rupees.
All right. And you want a shorter term view? Yeah, go ahead.
Well, my idea was I'll book profits at 190, between 190 and 195, but damping fell down.
Right.
So my question is, shall I hold for 3 months or shall I exit and reallocate?
All right, so you want a shorter term view for IOCL. I believe 3 months is your time horizon.
Not short, long. Not short. I'm long.
All right, so you want a fundamental view on IOCL, right?
Yes, IOCL,
right.
Indian Oil Corporation.
Okay, IOCL, okay. All right, Sunny, I'll come to you for this one. So Suresh wants a view on IOCL, and he wants to know whether he should keep holding it from a longer term horizon or he should book profits at the moment.
Yeah, Mahima, I would recommend to remain invested in IOCL. So what has happened during the last quarter is that because of the pressure on Singapore GRM, we have seen losses in most of the oil marketing companies. So as IOC has also reported losses, and hence we have seen stock price correction. I think remain invested. Of late, we have seen recovery in the Singapore GRM, and we expect December and March quarter to be far better than the September quarter. I think the fair value of the business is north of 200 rupees, so remain invested in IOC.
Okay, I think we may have misunderstood your question. Let me just get it right? So you bought at 175, you got a 3-month time horizon, you've lost a little bit of 174, the stock is at 139, and what you're asking essentially, Suresh, is whether you should sell at this point or should you stay invested for the next 3 months. Kush, on the charts, would you hold on to this with the hope of reclaiming 174, or would you book losses?
I think, Alex, you've done a fair bit of justice to this query. That's exactly what my understanding was, and I was ready with an answer. And that is, hold this with a stop loss of 130. There is a recovery underway, and there's a good possibility that the stock could, from a 3 to, let's say, 6 months, if I can extend that time frame, come closer to his buy price. However, not sure if 174 will eventually be crossed, because you've got selling pressure from this 165 to about 170, 175 kind of zones. So once again, maybe in a lesser loss, but then from that kind of a time frame, you should continue holding on with a stop loss of 130.
Okay, Suresh, hopefully that answers your question. We have to slip into a break on this episode of Ask Profit. Sunny and Kush, do stay with us. And viewers will be back on the other side to take more of your questions. So keep the phone lines ready and send your messages to WhatsApp. The number is on your screen, and we'll be back very soon. Do stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back back. You're watching Ask Profit. For viewers who've just tuned in, we've started a new way of answering your queries. You can now call us on the number that will be flashing on your screen, right away, and you can ask all your stock-related queries by calling us, or you can also WhatsApp those queries to us. We have our next caller, who's Shweta from Hyderabad. Shweta, thank you for calling NDTV Profit first of all, and how can we help you, and what's your query related to?
Hi. Firstly, I would like to thank NDTV. You guys are really amazing. You are providing so much information. Even households like us are really able to invest wisely because you are bringing so many experts and CEOs of companies every day. Thank you so much.
Thank you so much, Shweta. Yeah.
My question is regarding the hospital sector, actually, broadly. I'm holding Rainbow Child. Recently I purchased. My purchase price is 1591. So if I would like to add more, at what levels can I add in Rainbow Child? And also, are there any other attractive picks in hospital sector where I can take a fresh buy?
All right.
For 6 months to 1 year is my time horizon.
Okay. And do you mind if you want to keep holding it beyond 1 year? Do you want a fundamental view on this, or do you want to know how Rainbow Child looks like on the charts right now?
Yeah.
So you want to know the fundamental view?
Yeah, fundamental view, and if you'd like to add more.
Okay, at what levels?
Can I add? Yeah.
All right. I'll take your question to Sunny then, Shweta. Sunny, I'll come to you for this one. Your view on Rainbow Child, first of all, whether she should add more considering she's bought it at 1591 a piece, and she also wants to know if there are other pockets which are attractive in the hospital segment.
I think Shweta is looking for Techno Funda View. So Funda View, let me present over here. So I think Rainbow, again, we are bullish on the regional small hospital businesses and especially Rainbow Child. So I think I would suggest you can add more share on DEEPs as far as Rainbow Child is concerned. And few other names which we like within the hospital space, again a regional play. KIMS and Yatharth Hospital, these are the two smaller regional players within the hospital industry which we like from the hospital space. And in addition to hospital, if somebody is looking to play ancillary, I think MedPlus is one company which is a predominantly online tech-based pharmacy. So MedPlus can also be looked upon from a long-term perspective.
Okay. And Kush, quickly, what levels can she add more stocks of Rainbow Child?
Around 1500.
All right, 1500 is the levels that you can, add more Rainbow Child stocks to your portfolio. But we also have our next caller, Alex.
We do, but before we go to Seshu's joining us from Hyderabad. Seshu, do stay with us. I need to take a few questions from WhatsApp as well. People are sending me angry messages on WhatsApp. The next one is Jay Krishnan. He's writing in from Kozhikode, and he points out that Kush is his favorite analyst. Kush, so a lot of our viewers have been making our day. I thought I would extend that to you as well. Coforge is the name of the counter that he wants to know about, and he's asking whether he can enter this level. If not, at what level should he enter?
Alex, I'm going to record this and play this over, if for nothing else, for, as you said, making my day. But thank you so much for that lovely compliment. And, we do our best. We try and do our best, and glad to see that, it does sort of help. So thank you so much for that. I believe that, if he's been watching NDTV, your show, and, bits and pieces of me also on the network, I think he's heard Coforge from me as well. When it comes to the mid-cap space, persistent Coforge, these are the two names that, we've been bullish on. I think the stock could well continue its way up until 9,000. The only thing is it's starting to reach the overheated territories on the technical front. So if you don't have, then wait for a slight dip closer to 8450, 8500 levels, then go long. Positionally, we think 9,000 and higher levels are on the cards for Coforge.
Okay, that's the view coming in on Coforge. The next question is from Malika, who's from Mumbai. She has 1,000 shares of Som Distilleries bought at 117 a piece, and she wants to know whether you would recommend a hold or sell or reinvest in any other stock, considering you sell Som Distilleries at the current levels. Sunny, I'll come to you for this one. Som Distilleries has faced a lot of pressure in the past few months, considering the legal obligations as well. But if not Som Distilleries, which stock in the Alcobear sector?
Again, I would like to switch from Som to Radico Khaitan, which is a more of a credible and well-established player. And another one turnaround story which we like among the alcohol is Allied Blenders and Distilleries. So very robust set of number we have seen during the quarter two. So Radico, Kethan and Allied Blenders.
We've got our next caller. Seshu's joining us from Hyderabad. Seshu, thanks so much for holding and for your patience. You've bought Jupiter Wagons, right? I'm curious about what you were thinking. The stock is up and about in trade today.
Hi. Good morning too. Thanks for NDTV. So actually, I bought a JWL around 587, 1300 quantity. So somehow it has gone down and keep on going down.
Yeah.
So somehow now it is increasing. Maybe I'm just thinking, can we do averaging? Still, I'm I'm thinking to go for long term. Actually, that is the reason I invested in this JWL and some other stocks like fundamentally strong stocks.
Yeah.
But now I'm thinking whether can we go for averaging or can we add some more items if required.
Seshu, I'm just curious, when you bought Jupiter Wagons, and it's doing particularly well in trade, as you pointed out, 5% up. So you've recovered some money, but why did you buy it? What was the thinking behind it?
No, actually, fundamentally it is a strong, and also like now government is BJP government definitely like railway stocks and all keep on increasing. So that is the reason there is a chance to increase. So that is the reason we thought to decided to invest in this.
Okay. And Seshu, when you're talking about long term, what is the perspective that you have? Because you've actually bought a very large quantity. 1300 is a pretty big quantity. So what is the time frame that you had in mind?
Yeah, long term, actually more than 2-3 years.
More than 2-3 years. Okay. I'm going to take your question to Sunny. Sunny, on the fundamentals, the stock is up and about in trade today. It's recovered some ground, but it's still quite off his buy price. What is the prospects looking for the stock, and are you comfortable with the valuations as they stand? Should they buy right now, Seshu?
Yeah, definitely. I think we continue to remain bullish on entire railway wagon as a space, whether it is Jupiter, Titagarh, as well as Texmaco. So I would recommend to remain invested, and the opportunity size is pretty large. So close to 3 lakh wagons at a current juncture. Government is trying to expand that to 6 lakh wagons over the period of next 3 to 5 years. So I think stay remain invested. Although at a current juncture valuation appears to be slightly expensive, but looking at a growth trajectory, I think one can stay remain invested in Jupiter wagon.
All right, one can stay invested in Jupiter Wagons is what is Sunny's view. The next question is from Gautam, who's from Mumbai. He has 500 shares of Exide bought at 526 a piece, and he wants to know whether he should hold or sell or accumulate more at this point. Kush, I'll come to you for this one. How does Exide look to you on the charts?
Recovery underway. The 200-day moving average resistance of 465, and also the selling pressure around those levels is acting up. I think once this level is taken out convincingly, the stock manages to close above that. I think you'll see a good run up until 490. His buying price is still higher, so there could be a possibility that he might have to wait a little longer on this one. 490 to about 510 is a bit of a supply zone. So closer to that, you might want to start exiting. Beyond that, if he can hold, then yes, there is a good possibility that the stock could run higher. For now, my suggestion would be to hold with a stop loss close to 425 for levels of 490 and 510.
Sriram is calling us from Chennai. Sriram, good morning. You've got a significant quantity of BEL, 1,000 shares. When did you buy it, and what was the thinking?
Yeah, thank you so much for this. And I have been accumulating this stock in over last 1.5 years. Whenever I get a chance, considering the government's push on defense, Make in India initiative, and I see a lot of investment will go into that.
Yes.
And of late, I've been noticing it is still there is enough room for it to grow. And I have a long-term perspective always. Though I say 6 months to 1 year, I still want to know the outlook, fundamentals. Can I invest more? I have about 2 lakhs I can invest now.
Yes.
2 lakhs rupees.
Yes.
Should I invest in this for a long term of 1 year plus?
Okay.
Or compared to that with Engineers India?
Engineers India. Okay, fine. I got your question, Sriram. Let me take across to Sunny based on the fundamentals then. BEL, as you've heard, Sunny, he's been buying on a staggered basis. He's wondering whether to deploy an additional 2 lakh rupees here, or should he pick Engineers India?
I think the fair value of BEL comes close to 330, 340 rupees with an investment horizon of 6 to 12 months. So in case somebody wants to accumulate BEL, I would recommend that any number below 280 is the something that will add value to the portfolio. Coming to Engineers India, again, I feel the alpha from here on will be more in Engineers India. I believe the fair value of Engineers India is close to 270, 280 rupees. So I think, and again, backed by the solid fundamentals, the kind of capex which is going on in the oil and gas sector, I think Engineers India is something which can deliver a better return over the period of next 6 to 12 months.
The next query is from Sridharan, who's from Coimbatore. Now, he's holding Bank of Maharashtra at 55.57 apiece, and the stock is currently trading at approximately 55.85. And he wants to know whether he should hold it for a short term or a long term to gain a reasonable profit. His time horizon is between 3 to 6 months. So, Kosh, I'll come to you for this one. And he also wants to know what could be the safe stop loss for this particular counter.
So I think the stock's fairly close to his buying price, if I'm not mistaken. So in this case, not a bad idea to have your stop loss close to the 51 mark. The recovery on this one has been, I wouldn't say spectacular, but rather encouraging. So, on the upside from a 3 to 6 month perspective, I think you're looking at 61 as the first target. Again, the 200-day moving average will start acting up here. But beyond that, you're looking at a 66 as well. So anywhere from 3 to 6 months time horizon, 61 to 66 is the level that you should look for on the upside. And your stop loss, as I said, should come close to 51.
All right, next caller, Srivardhan's calling in from Bengaluru. Srivardhan, good morning to you. You want to know about Tata Motors. What exactly is your time horizon and why did you buy the stock?
Recently there was a fall in Tata Motors. I thought like this is a fair value, so I bought it at Tata Motors.
Yes.
My question is, should I hold it this current junction or add more and average it out? Okay. If I have to sell, is Akums Pharmaceutical is the best buy right now.
Sorry, can you repeat the second part of your question?
If I have to sell, Akums Drugs and Pharmaceuticals, is it a best buy?
Okay, Akums, got it.
Or if I have to have a fresh entry, is it a good thing?
Okay, got it. And Tata Motors, what specifically did you like when you looked at the fundamentals? Did you look at Jaguar Land Rover?
Jaguar Land Rover and EV sector, four-wheeler EV sector.
Understood.
Like this is the first and affordable price variant they are getting it, right? That's the reason.
Understood. All right. That's a very good question. And let me take it across to Sunny. Sunny, on the fundamentals, Tata Motors, of course, the new entrant in the EV space, not new, I shouldn't say new entrant because look, Mahindra and Mahindra was the first in the play and they've fallen off the race a little bit. But it's highly disruptive, right? This sector, you can come up with a new product and you can change the game entirely. So would you say that Tata Motors is a good hold at this point? And he's also looking at Akums. And we've had a few retail investors ask about this counter. How do you like it?
Again, Tata Motors, the post correction looks favorably, risk reward looks favorable looking at a valuation. But again, one need to be have a little bit longer horizon because what I feel even a December quarter is something where we can see a muted kind of numbers from Tata Motors. So again, I believe the fair value of the business is close to 1,000 rupees. So with an investment horizon of close to 12 to 18 months. So Tata Motors, again, I feel downside risk is limited. Coming to Akums Drugs, again a play on CDMO sector, where we have seen a good set of number on CDMO front. However, the API segment was a drag this quarter, and post this correction, I would recommend that one can add in the portfolio at a current level from a long-term perspective.
All right. Well, the next caller is Sandeep Reddy from Hyderabad. Sandeep, thank you for calling NDTV. I believe your question is on Jio Financial. I want to know what's your rationale behind buying this and what do you want to know exactly?
Well, my question is on NBFC sector as a whole. What would be the scenario going forward? And Jio Financial, I heard that there was a news on brokerage firm which is going to start for Jio Financial, and of course their progress would be big because Mukesh Ambani is there on the as a leader. So just wanted to understand for the 3 to 6 months horizon, what could be the scenario, because it's been 6 months I'm trying to hold it, but still have a lot of losses.
All right.
I'm continuing to hold it next 6 months. Yeah.
All right, 6 months is your time horizon. Kush, I'll come to you for this one. First of all, how does Jio Financial look to you on the charts? And if not Jio Financials in the NBFC sector, what are the counters that look attractive?
Well, look, I can understand his disappointment, with Geo because he's held on to this one for some time, and the stock's actually just gone sideways, mild negative bias, in fact. But if he can, extend his horizon, let's say 9 to 12 months, then I think he could be in for a good ride where the stock could actually head to 375, 400 kind of levels as well. There's a good consolidation that's happened after a good move last year. So I think this is one stock which is not for trading just at the moment. The momentum's missing, but if you can hold it for slightly longer perspective, then yes. From a 3 month perspective, there's a possibility that the stock could hit close to 340, 345 kind of zone, which is still marginally under his buying price. So Geo, that's the view on Geo. Near term, the momentum is missing. From a 9 to 12 month perspective, the stock could see 375, 400 kind of levels also. Now, as far as the other stocks go in this space, I think a couple of stocks that we are tracking. One of them is Shriram Finance. The stock had a fair degree of correction, rebounded smartly from the 200-day moving average. On the upside, positional targets are 3,200 and 3,350 kind of levels, and the stop loss will come around the 200-day moving average, which is 2,800. Also, you might want to consider from a positional standpoint Muthoot Finance, where again there's a good base formation around the 1,800 mark, and on the upside you're looking at 2020, and once that is taken on, perhaps even 2,100. So the alternatives are Shriram Finance and Muthoot Finance. Geo Finance, from a 9 to 12 month perspective, should be a good hold.
We've got a few more minutes left on the show. Unfortunately, I'm going to close the phone lines right now because I've been ignoring WhatsApp. I need to take a few more questions. Gentlemen, let's try and keep the answers as quick as possible, but do give your answers in give your justification. HDFC AMC is the name of the counter that we're talking about next. Satish from Bengaluru has bought 4,500 rupees is his buy price. He's looking at a 2-year time frame. On the fundamentals, Sunny, would you hold on?
Yeah, I think remain invested, but again, looking at the recent rally, the fair level of expectation should be 10 to 12% kind of CAGR return over next 12 months. 12 to 24, sorry, yeah.
Okay, let's take some more questions. We've got Quick Heal Technology, which has been bought by Yash at a price of 400 rupees a piece. He's looking whether to hold for the long term. Sunny, on the fundamentals, would you suggest a hold?
Yeah, continue to stay remain invested. That's the play on cyber security and basically a security space. And the company has been doing well of late, to stay remain invested.
Right. Gentlemen, it's time to hit the rapid fire segment. This is, remember, where we throw as many questions as possible at you in the span of 2 minutes. Give us your response. The first question coming through is from Rajesh. He's writing from Bengaluru, and he's asking about Ircon International, which he's bought 697 shares of at a price of 293. The stock is down and it's at 211. Should he hold on at the loss that he's experiencing right now? Kush, what's the view?
Continue to hold, stop loss at 195.
All right, the next question is from Durga. She wants to know what levels she can add L&T to her portfolio. Kush, I'll come to you for this one.
You'll have to.
Yes,
so it's 20% for the year. 5 lakh crore is the order book, if I remember correctly. Kush, on the charts though, is it a buy?
From a 12-month horizon, yes, good accumulation levels close to 3,600 to 3,550.
Okay, huge loss in, I'm not sure actually about this question. I'm going to go to the next one. HCL Tech. Okay, this is a question from Ashwini Kumar. From the long-term perspective, if you bought at levels of 1,869, not too far away from the buy price, from the market price right now. Sunny, on the fundamentals, would you hold?
Yeah, continue to stay remain invested. Again, a stock where one can expect a 12 to 13% CAGR return over next 2 to 3 years.
All right. Saurabh from Ranchi is asking about Ola Electric. He has 1,000 shares and average purchase price is 105. Should he keep holding it or exit at the current levels? The stock is up 3% after Jeffrey's initiation of coverage. So, Sunny, your view on Ola Electric?
Again, I would recommend to stay remain invested, as many exciting new product launches are on the anvil, and I believe that can help the Ola Electric to gain the market share.
Okay, 364 is the price of NTPC Limited as things stand right now. And we've got Vaishnav from Nagpur who's bought a humongous quantity. I'm finding it hard to believe this because he's talking about a lack of shares that he's bought and he's seeing a significant loss, he's pointing out, to the extent of 80 lakh rupees. Kush, on the charts, I hope that this is an accurate question. What would you do with something like this?
Depending on the time horizon, I'll continue to hold, and my stop loss on this one is close to 345, 350 positionally. Although the stock is under pressure, I don't see a very sharp recovery on the way. But as I said, positionally 345 to 350 is where he could keep his stop loss.
My goodness, I hope that Vaishnav, you've got a significant portfolio, and this is only a very small part of your portfolio. And wish you all the best with your investment journey, Sunny and Kush, thanks so much for joining in. Pleasure having you on the program, and thanks so much for the help that you've given to our viewers today. That brings us to the end of this particular edition of Ask Profit, and it's been an absolute pleasure bringing it to you. Hopefully the questions that we took have benefited you, even if we weren't able to take your specific question. Do stay tuned, lots more coming up over the course of the day. From Mahima and myself and the team that put the show together, thank you so much for watching. This is NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable.
Hello and welcome. This is the Small and Mid-Cap Show. I am Agam Vakil, and in this show we take you through a handful of companies which are in focus and we speak to the respective managements. But before that, I'm going to mark what's going on in the markets. And at the moment, it does seem like we are near day's lows, at least as far as the benchmarks are concerned. The Nifty is down by around 0.9%, nearly down 1% at the moment. And it does seem like we're taking support, at least rather the Nifty is taking support at the 24,050 odd mark. But the question really is that can we expect a little bit more weakness? Now, do remember that because it's the monthly expiration, there is always going to be that much bit of a volatility involved in coming through. But again, as I said, it's going to be a wait and watch as to how things could potentially pan out. For now, of course, the Nifty is under a tad bit of pressure. And, let's bring out the constituents of the Nifty to see how things are faring there and see where is, in fact, that weakness. So essentially, it is Infosys, Reliance Industries, and M&M, along with TCS, which is weighing down in the indices. I reckon Adani Enterprises, of course, the clear gainer on today's day of trade, trade, and again a big beat by a mile. But save for that, we have some support from HDFC Life and SBI Life along with the SBI. HDFC Banks has made a new high today as well. That's something which is also something to keep in mind, because it's certainly one of those moments where we are going to see a little bit of contribution coming in, but it does seem like it's wilted under pressure, and now it's slumped back. So after making a new life high on an intraday basis, it does seem like it's slipped into the red, potentially why we're seeing some weakness on the Nifty 50 here too. Now, let's move on and talk about the broader markets. Okay, so that of course is the banking index, and Kotak Mahindra Bank continues to disappoint at the moment, along with something like an Axis Bank and ICICI Bank. But let's talk about the broader markets. What are the small cap and the mid cap indices doing at the moment? Are we looking at substantial weakness there? No, not really. What's really happening is a little bit of an outperformance, as has been the case over the past few days. But that's not to say that we're seeing substantial gains in the mid-cap and the small-cap indices this morning. And also do remember that at the moment, there's a little bit of pressure even in terms of the advanced decline ratio. So if we can actually pull that up as well and see how things are faring there with respect to the advanced decline ratio, there you have it. In the last 1 hour of trade, the difference has narrowed substantially between advances and declines. And at the moment, we're looking at about 3 gainers for 2 losers. So it's a 3:1 ratio. And again, that's potentially the reason why we're seeing some amount of weakness playing out there as well. But with that, let's talk about a handful of other counters. So I'm going to take a look at some of the gainers and losers from the broader market. So we can also pull out the BSE 500 gainers and losers and see how things are faring there. So, this is no surprise that the top gainers on the BSE 500 are all Adani Group companies, because you do remember that we're seeing a very sharp bout of short covering even after we have the management of the group companies suggest that at least some of the key heads out there that include Gautam Adani, Sagar Adani, as well as Vineet Jain, have not been charged under the FCPA, and that's led to a very sharp uptick in a whole host of these Adani Group companies, short covering coming in. Besides that, ITI, Tube Investment, as well as RCF, all of them advancing in trade. Hutco, along with that, is also seeing a bout of an up move there. So that's what we have in terms of some of the big movers at the moment. But on that note, let's get in the management of Balaji Mines. Well, we are now in conversation with the managing director of the company, D. Ram Reddy. Mr. Reddy, good afternoon. Thanks for joining in. Mr. Reddy, we didn't have a chance to have a conversation with you in the second quarter. But I actually did want to understand that in the second quarter, we had seen a decline in volumes. Revenues also came off on a year-on-year basis, but you had a very strong show when it came to operating margins. Taking all these factors into consideration, I want your view on what we can expect in the second half of this financial year when it comes to, one, volumes, revenue, and consequently, the impact on operating margins.
See, the prices last 2-3 quarters were not stable. They were very low. Now we expect that there is some movement in the pricing and offtake of the material in the pharma and API and agro also. We have seen some movement. So that's the reason you could see some better margins. And as regards to volumes growth, we have done year-on-year basis about 6 to 7%, if you see, and we aim it to about 10 to 12% for this total current financial year. And margins also, I think it should be between 18 to 22%, basing on the current trend. If something goes wrong, we cannot say, but as of now, yes, I can say it's everything on the track.
So 10 to 11% of volume growth that you're expecting for FY25. Mr. Reddy, just wanted to understand, with this volume, what is the target when it comes to revenue top line for FY25?
FY25 will be about 16 to 18 crores on the standalone basis. But you are well aware that we have many things in the pipeline for the expansions. Going forward in next 2 years, we will see more than 3,000 crores if the prices are stable, because the methylamine plant just commissioned, which is about 48,000 tons per annum plant is commissioned. And same way, dimethyl ether is another big product, which is about 100,000 tons, which is going to be commissioned by the end of the year or maybe first quarter of the next financial year. And the same, there is a product called N-methyl morpholine, there's isopropylamines. So these are all in the pipeline, the Balaji Amines. And even in the subsidiary, that is Balaji Specialty Chemicals, we could not do well because of the dumping and many other reasons. But there is a big expansions we have planned, as said earlier. There's about we have planned for 750 crores in the 2 phases. First phase will be about 300 to 400 crores, which we already started the land digging, which may take about exactly 12 months from this month. Maybe next December, you will see at least 2 to 3 plants will be commissioning and starting the production in the unit 2, which are again very premium products like cyanide-based products. So looking into all these things, we aim that in the coming 2 years, we should touch about 2,800 to 3,000 crores revenue, and with about 18 to 20% EBITDA margin, should be in a position to maintain.
18 to 20% EBITDA margin with around 3,000 crores of revenue in next 2 years. Now, as you rightly said, so this was actually my second question, that you're doing a lot of capex when it comes to expansion. Now, what is the capex number that you have set in, and how are you gonna fund it?
See, for Balaji Amines, we will be doing about 100 to 200 crores this financial year, maybe first or second quarter. We'll be finishing all the expansions that are all meeting from the internal accruals. As far as the specialty chemicals is concerned, first phase will be doing about 350 to 400 crores, in which we may need maybe 50 crores at the end of the completing this project, that we may go for the borrowing, but the rest of the things will be from the internal accruals.
And also on your DMF, so now since the new methylamines plant is commissioned, I guess in November 10, can you expect, 80 to 85% of utilization when it comes to DMF, number one? And number two, let us know the anti-dumping duty and export for this product.
See, we were expecting now, as you rightly said, about 80% for the rest of the 6 months. We should be in a position to utilize about minimum 75 to 80%. And after finishing this, maybe utilizing the 80% capacity, we will see once again go back to the government for the anti-dumping. Still, we are seeing a lot of pressure from the China for the dumping. That we may go back again to the government for the seeking the anti-dumping.
And also, Mr. Reddy, so one of your clients has come up with methylamine plant. Now, how this will impact Balaji as a whole?
See, anybody comes to see our plant, total plant, you are well aware that say zero debt. We don't have the debt even for the working capital also. If somebody comes, if their capital borrowings and as well as working capital, if you calculate, so those margins itself is enough for me to compete with them. So we have our own plans. We have the forward integration in many products, like as you said, that DMF, DMAC, and dimethylamine ethanol, dimethyl hydrochloride. Many products we have in the forward integration. That's the reason we don't see that any major loss will come to us because of the domestic competition.
Also, you were at active discussion with the battery players, for some chemicals like 2P and NP. Now, have you received any orders? If not, when is the same expected? If you could just tell us what's actually going on ground.
Actually, we thought that these battery manufacturers will start their plants about 6 months back only, but nobody has started. And we are ready with all our capacities, with For the electrolytes, all the carbonates we have, dimethyl carbonate, propylene ethyl methyl carbonate, methyl carbonate, all these are, we are ready with the part of the capacities, and we are gearing up for the additional capacities also. But nobody has started. According to my calculations, only in the first quarter of the next year only, maybe actual manufacturing may take place. That time we are ready. In addition to this, we are hearing many investments in the semiconductors also. There also we have a couple of products which goes in the semiconductor. If that happens, if not immediately, maybe in coming years, that is also will be an opportunity and advantage to the Balaji Mines.
Okay, I got it. Now, can you give us an idea about how your second half might look like when it comes to specialty chemical business? Has the Chinese dumping eased or reduced in the third quarter? What are you seeing there? I mean, can we get back to the normal EBITDA margins that Balaji used to have, or normal revenues that Balaji used to have?
See, on standalone, definitely because of the product mix, we have already commenced this quarter itself. We have seen that EBITDA margins have been improved. Like what I used to say regularly, 18% to 20%, 20%. This time we have seen already 19%. I think we should be in a position to maintain between 18 to 22% because of the product mix. In spite of the lot of dumping happening in one or two products from the China, and we hope that if something comes from the support from the government, then that will be the plus point for the entire revenue and the bottom line also.
Okay, all right, Mr. Reddy, we leave it at that. Thank you so much for joining us and taking us through the company's outlook, as well as what we can expect going forward with respect to the various aspects that he spoke about. Of course, that's the management of Balaji Mines telling us what's in store. Now, of course, as we mentioned, a lot of the capex has happened, come through, and the management is also telling us that come next year we will have a handful of facilities which will be on stream and which will be contributing to Balaji Mines' output overall. So that's something to keep in mind. But with that, we shift focus to Suprajit Engineering. Let's pull up the stock firstly, see how it's done. So over the last 12 months, it's given you a healthy return of around 24%. In general, of course, while we have seen a lot of volatility with respect to the auto sector, what we're also seeing in Suprajit Engineering is, it's moving largely in tandem with the auto ancillary space. To talk to us about how things are panning when it comes to the company itself, the sector too. Well, we are now in conversation with Mr. Ajit Kumar Rai. He's the founder and chairman of Suprajit Group of Companies. Mr. Rai, good afternoon, and thank you for joining in. Mr. Rai, I wanted to actually start off by talking about the latest MOU that you have signed with Chio Spring Company. Can you tell us a little bit more about firstly, what this MOU stands for, what this JV will be all about, and how this can contribute to the outlook and overall performance for Suprajit going forward?
Good morning, and thank you for having me on your channel. The Chio Springs is a leading suspension spring and specialty spring manufacturer out of Japan. They also have a cable division as a part of their business. They are major suppliers to all the Japanese OEMs, not only in Japan, but all over the world. And, they've been wanting to come to India for a while, whereas Suprajit, as you know, is a global company with cable plants in multiple places, and we supply to multiple customers globally. But in India, our presence with the Japanese OEMs are limited to the tier 1 and tier 2 suppliers. So we had a strategy to break the Japanese OEM market in India, Marutis and the Toyotas of the world, and particularly in the transmission cable business, which is a specialty product of Chio Springs. We wanted to bring to India and eventually probably exploit it to the world. I think that is the basic background of this. Chio Spring also wanted to come to India. They don't have any presence. They just, of course, signed another JV for some springs in India. So we are going to partner with them to make this venture out of India to manufacture transmission cables for the two major Japanese OEMs to start with. and then see how we can leverage the strength of the joint venture for our global ambitions.
Well, I have with me who's my colleague Puneet Javeri, who's also joining into the conversation. Puneet, you want to take over?
Yeah, sure. So, Mr. Rai, good morning, sir, and thank you so much for joining us today. Great speaking with you again. I just wanted to take forward the point that you mentioned on this agreement, right? Because as you rightly said, Choose Springs also has another partnership. So, just talk to us about what kind of exclusivity do you have with them in this particular agreement, because they were looking for increasing their presence in India, as you rightly said, and the Japanese. So just start off us with that. Basically, what's the outlook? And starting off with their presence in India, do you see that the another partnership that they have will hinder you in any kind? And what's the exclusivity agreement for you specifically?
Let me clarify. I think their other joint venture is for their main products of springs.
Yeah.
What we are doing is cables. Our understanding with them is for transmission cables, and it's an exclusive agreement with us only. There's nobody else involved. So the idea is that we will approach the top two Indian Japanese OEMs for the transmission cables using their specialty product, which is their technology, and try to break into the Indian OEM market and then use that for the global market.
Mr. I just wanted to understand, so you mentioned that it's for transmission cables going forward. What is the kind of outlook can you give us for, this particular agreement? Any kind of targets that you are targeting for FY26 for revenues and margins would be safe to assume between 8 to 10% as a traditional business?
We just signed an MOU to get into a joint venture agreement and joint venture program. The plan is sometime in the next 12 months, we will operationalize this MOU. So it will take some time. I think we are right now in the process of finalizing the entire plans for this joint venture. So it will take some time. I think probably in the next 1 quarter or so, we'll get to know how the entire MOU will translate. The idea is to set up a joint venture company in India, which is going to be 50-50 in terms of equity participation, and manufacture transmission cable to start with for the Indian two major Japanese OEMs. Hopefully it will happen in the next 12 months in terms of completely, operationalizing this project.
Point taken, Mr. Rai. So FY26, you will be looking to start the project at least in the second half, essentially in Q3 or Q4, with FY27 being the first full year of seeing this joint venture. So we'll speak more about it once this operationalizes in FY26. I just wanted to take forward the point which we taken last time, because you mentioned that Q2 was a tough quarter because of restructuring that's happening in Americas, as well as what's happening with your recent acquisition of SCS as well. I just wanted to understand for transmission cable specifically with the joint venture, what's the global market looking right now? Because you mentioned that Europe has some pressure that you are seeing currently. So just wanted to understand for this product specifically, what's the export market looking like, and is your share roughly about 30 to 40% of revenue coming from the global markets for transmission cables?
No, I think transmission, we are into an overall control cable space. Transmission cable is one of the many cables that come within the ambit of control cables. We also make transmission cables, more push-pull cables, mostly for the non-automotive and trucks business. The specialty transmission cable is actually a small part of the entire control cables business. So it is not really 30 to 40% of our market. Our market, the cables, I'm talking about the general cables, is, in India, we are the leading player, and globally, we're in the top two, along with probably Hilux. And that is our position globally in the cable space overall.
All right. Well, Mr. Rai, we leave it at that. Thank you so much for joining us and taking us through that outlook for the company. Of course, we'll continue to track the updates from the business and continue to give you those updates too. But for now, on a steady footing, at least as far as the last 12 months returns are concerned. And with that, Puneet, just thanking you as well for guiding us through that conversation. But let's take a look at the markets then before we wrap up this edition of the Small and Mid Cap Show. I want to talk about the small cap and the mid cap indices specifically to see how things are faring there, to see how things are turning out, because so it's turned out, it's to be a volatile day of trade so far, and that's exactly how it is panning out for now as well. What we're actually looking at right now is once again a very sharp uptick in a lot of these indices. So the small cap index is up around 0.6%. The mid cap index is also up and about by around 0.3%. So things have certainly changed, but can they remain the same? That's a wait and watch. But on that note, it's a wrap on this edition of the Small and Mid Cap Show. Lots more lined up on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.